Hello and welcome to the lender training for the StartSmart program. I'm Whitney Weibel, an ADFA compliance underwriter.
And this is Derek Rose, Director of Communications here at ADFA.
And we are going to go over the StartSmart first time home buyer program with you guys today.
Everyone, this is Derek Rose. I'm Director of Outreach and Communications. I wanted to update you guys on the new website. So we have three options now. If you go to adfa.arkansas.gov, you'll see home ownership, development finance, and housing development. Home ownership will take you to the homeloans.arkansas.gov website, which is still available to our potential home buyers. Right there is where you will find out about ADFA programs. If you're a potential home buyer, you can get our current loan rates and you can find a lender. This has been made, I think, a bit easier. So all you have to do is put in the city that you're looking for. You can put in a radius of however many miles you want to search in that area. You can even use your current location to find a lender, and you can find one there. So that is the homeloans.arkansas.gov website. For you as a loan officer, you're going to go to the hamburger menu right here in the top left-hand corner. You're going to hit that. You'll see the drop-down menus. On the drop-down menu, home ownership, there are all our programs. You'll also sign up for program updates here or sign up for a daily rate sheet. But what's going to be important to you is our lender resources. You hit the lender resource page. That's where you're going to find our Midas portal, program guidelines. When they're updated, they will be found right there. You can get to your compliance forms for the StartSmart program. You can download all your exhibits right there. Also some flyers and marketing materials available. Again, you can also get your latest announcements by going here and signing up for program updates. You can get your daily rate sheet by signing up down here. So there's two places to get that information. Also other lender training resources. This goes to our Go to Stage training channel where you will find videos to get yourself more familiar with our programs. Hope that's helpful, and I will now get you back to the training you're watching.
So let's really get into StartSmart first time homebuyer program. So because ADFA is a state housing finance agency, the IRS allows us to issue tax exempt mortgage revenue bonds. The savings generated from the tax exemption is passed along to homebuyers who receive below market interest rate mortgage loans, and more importantly, a lower monthly payment. This can also be paired with ADFA's down payment assistance program. This is a 10-year second mortgage loaned at the same interest rate as our first mortgage. It allows homebuyers up to $15,000 for down payment and closing cost expenses. So who establishes the guidelines for the StartSmart program? Well, like all of our other products, ADFA is solely going to focus that first bit on the industry guidelines. So whether you have FHA, rural development, conventional, you must follow those guidelines first. Then ADFA has their guidelines. It's not only established by our own agency, but by Service Solutions, our master servicer. If you have any questions on their stuff, you can go to their all regs, or you can email questions@ahfa.com. HUD is our main source for establishing the income limits. And the IRS actually establishes the maximum sales price limit. So borrower requirements for the StartSmart program, we're looking for borrowers and their non-purchasing spouses, if applicable, to be first-time home buyers, or they could be military veterans or spouses of veterans with an exemption, or they could be purchasing that primary residence in a targeted county. We'll get into those in a second. The sales price limit is $425,000. And since this is an income-based program, it's going to vary by county and household size, but we're looking at the income of the note holders and spouses. We do require a minimum of a 640 credit score or higher. We have a max DTI of 45% or below. And we have to get that AUS findings that's approve, eligible, accept, refer on the risk is not allowed, and there is no manual underwriting. Another borrower requirement for StartSmart is that borrowers must occupy the property within 60 days of closing. And just a little note, if they're working from the primary residence, that can only take up 15% of the space of the home. So let's get into the qualifications of a first-time home buyer or exemptions that are allowed for this. So a first-time home buyer is someone who has not owned a primary residence within the last 3 years. Now, this is not applicable in targeted counties. Targeted counties are counties of economically disadvantaged areas. And so for those targeted counties, the first-time home buyer requirement does not exist. But for our non-targeted counties, let's talk about who qualifies and who doesn't. So someone who owned a manufactured home for the last 3 years, but it's not on a permanent foundation, they qualify as a first-time home buyer. Someone who has a rental property, as long as they've not lived on that property or used it as a primary residence, they qualify for a first-time home buyer. What about a separated or divorced home buyer? As long as they have not occupied that home for the past 3 years, they qualify as a first-time home buyer. There's a great exemption that this program offers for veterans or spouses of veterans. There is a one-time exemption, and we will require a certificate of eligibility, so a COE, or a form DD-214 to allow that exception. So again, this is an income-based mortgage. So we are asking our lenders to make sure that the borrower and their non-purchasing spouse have disclosed all income before any deductions. And then once you get that, you're going to project it out by 12 months. So for that first-time homebuyer compliance list, we're looking at note holders and their spouses. We need a credit report for those non-targeted counties. We need last year's transcripts or borrower signed tax returns for non-targeted counties. And then that borrower and non-purchasing spouse, if applicable, income. And what do we mean by income for our note holders and non-purchasing spouses? Well, 2 consecutive pay stubs within the last 30 days, clearly showing that pay period and the ending date. We're going off that pay period ending date, not the pay date. We're looking at spouse income. So even if they aren't on title, that's why we say the non-purchasing spouse. If they're separated, we will need a legal separation agreement. However, they still have to sign the note because they are not divorced. It's a rule in Arkansas. You have to follow that. We need a VOE within the last 30 days. If your borrower is self-employed, remember there's that 15% of the house that they can use for that self-employment if it's in their house, but we will need 2 years of tax returns and a current year-to-date P&L. It can be self-prepared and it needs to be signed and dated by your borrower. We're also going to be asking you for awards letters, so Social Security, unemployment, workers' comp. We're looking at child support documentation or alimony documentation. We're also looking at gross rental income, deferred income, etc. So all of this needs to be included in your underwriting. Now, we did take a little snippet of the income limits for you guys. This is not only in our guidelines, it's on the website, it's on Facebook. But as you can see, we're telling you which county is targeted and non-targeted. We're also telling you the income limit for the number of occupants in the household. So 1 to 2 members of the household or 3 or more, there is a difference in those numbers. So make sure that you're looking at the right columns. And this is just for you guys to maybe take a screenshot. We've got 30 targeted counties in Arkansas, and you know that they do not have to be first-time home buyers in these counties. So I always recommend taking a screenshot of this one. So let's get into eligible properties for StartSmart. So we've got single family detached, townhomes, condos, modular homes. We do allow duplexes as well, but they have to be purchasing both sides, and it is FHA financing only. Now, the rules for StartSmart are simple. Borrowers must occupy one side, and the property must be at least 5 years old, unless it is a targeted county. If it's a targeted county duplex, they could be a new construction. For manufactured homes, we want you to follow those FHA and Service Solutions guidelines. And StartSmart's big thing is that the home cannot be on more than 5 acres of land. So let's get into what ADFA underwriters are going to be looking at for compliance documents. So we need a pre-closing checklist. You can get that off of the lender portal. We need an AUS finding that's approved, eligible, accept status with a DTI of 45% or lower. Remember, no manual underwriting is allowed. We need a typed final loan application. We need a recent VOE. We need 2 pay stubs within the last 30 days, or if they're self-employed, that 2 years tax returns and a year-to-date P&L. If you have a veteran and they're needing that one-time exemption, we need a COE and a DD-214. We need an appraisal that is as is. We need a real estate contract that's fully executed. We need last year's tax transcripts or signed tax returns for non-targeted counties. We need a tri-merge credit report for non-targeted counties. And then we need exhibit A, B, C from the lender portal, completely executed, and K if it's a manufactured housing. When we're looking at closing documents, we need the post-closing checklist downloaded from the lender portal. We need the first mortgage closing disclosure signed and dated by borrower at closing. We need the final loan application signed and dated by borrower and lender at closing. We need the first mortgage executed at closing with tax exempt rider attached. We need the first note executed at closing. We could possibly be asking for the warranty deed, but that is a case-by-case basis. And then we need the exhibits from the lender portal. So exhibit E, F, G, P, and the county income limit page. So let's go over the loan process for the StartSmart program. So for the compliance review, once you reserve your loan, you have to upload the compliance package within 5 days of that reservation date. So if you have a new construction, please wait to reserve it. If you have an appraisal that's completed, but it is subject to, please wait to reserve it. We will cancel it if we do not have the compliance package within 5 days of reservation. And you can re-reserve if we have the funds. So for that compliance review, we're looking at that pre-closing checklist and all the checklist items that have been uploaded. We're looking at income to make sure that it is in fact under those income limits. Once we have reviewed and approved your compliance package, we'll issue a conditional commitment and we will send you that DPA awards letter. So once you've been given those, then you'll actually see the closing documents available to download from that lender portal. But even when we give a conditional commitment, that does not guarantee a purchase of this mortgage. If anything changes from conditional commitment to closing, you must let ADFA know and resubmit documents for a second commitment to be issued. Once your loan is closed and everything has gone through, we're going to do a double check that everything on our income side is good. We're going to follow that checklist and those checklist items to be reviewed. We are looking at that AUS to make sure that you have closed within the appropriate amount of time with that approve, eligible, accept recommendation and no manual underwriting. And then we will finally issue a lender approval. So with the StartSmart program, I do have to bring up the fact that recapture is a possibility. Recapture is a potential repayment of a portion of the interest savings that a buyer receives from tax-exempt finance mortgage. Recapture taxes could be owed if all three of the following occur. So a home buyer sells their home prior to the 9th anniversary date, and they make a net profit when they sell, and their income has exceeded the federal threshold income amount in the year that they sell. So it's paid with federal tax payment in the filing year of the sale of this residence. And the purpose of this is to retrieve the subsidy owed from borrowers who receive rapid income increases after they purchase their home. And as a result, they don't need that subsidy to remain homeowners, and they've sold within that 9-year span. If recapture is owed, however, ADFA will reimburse the borrower upon their request.
So the buyer has to request repayment from ADFA. You're going to have two opportunities, though, to inform the borrower about this, which we'll go into in just a moment. But just know that we think the possibility of recapture is extremely, extremely low.
And like Derek said, we are kind of relying on you, the lender, to inform the borrower of recapture. Well, we've kind of made it a little bit easy. So prior to closing, in the compliance review, you're giving them an Exhibit A that's fully executed. If any conditions appear on that, we will make sure that you have notified the borrower, they've initialed any changes, etc., because it's very important that they have that. But at closing, you're giving them Exhibit P. And the biggest part of this is you have one before closing and one at closing. So really quick, let's go over DPA, since it can always be paired with one of our first mortgages. So for the DPA program, we have available assistance between $1,000 and $15,000. It is a second mortgage, so it's a 10-year term, and it's going to be at that same interest rate as the first mortgage. For qualifying the funds used for this, you're going to look at down payment requirements. So those closing costs, that principal reduction, paid outside of closing items. ADFA does allow a little bit of cushion on those paid outside of closing items, but you want to get as close to even as possible with it. We completely understand that things change as you get closer to closing, but it's not an all the time situation, so please use that as minimally as you can. When you're looking at the borrower eligibility, that's completely determined by the first mortgage. So if you're using Move Up, you're looking at different eligibility lists than you are if you're using StartSmart. And when it comes to the property eligibility, the only thing that ADFA requires is that it is a primary residence only. So when you're looking at the DPA documents, we're looking at a post-closing checklist. You can get that off the lender portal. We want the DPA closing disclosure signed and dated by borrower at closing. We're wanting the DPA final loan application signed and dated by borrower and lender at closing. We're wanting the DPA mortgage executed at closing. DPA note executed at closing with the endorsement to ADFA. We've given you guys all the information for that. It's on page 4 right next to the borrower's signature. So if that's filled out, you do not need an allonge. And then we want the insurance binder to show ADFA as the second mortgagee. That's all we have today on the StartSmart program. You can reach out to any of us individually, absolutely, but the best way to access any of us is to email lender.questions@arkansas.gov. We all have access to that, and we get to them as best as we can, and at least one of us is looking at that at a constant.